Welcome to Atlantic Capital Markets International Share Tips for the year 2022. In this video, we'll give you our top 5 international companies that we believe as an investor you should take a close look at this year. We'll give you a full rundown of each company's recent performance, and we'll give our detailed thoughts on their outlook over the coming year, both from a macroeconomic perspective and a simple technical analysis perspective. We'll also summarise market analyst feelings across the industry as well towards each respective company. So, to set the context of our analysis, let's start with a brief outlook for the US economy for next year. The US economy has powered out of the recent global health issues. Just before the outbreak, the S&P 500 was trading around 3,400 and then rapidly fell to lows of 2,200. However, from these lows, it's posted a record-breaking surge where earlier this year it posted a fresh all-time high above 4,800. The major debate for the months ahead is how much of this surge was due to genuine underlying strength and how much was due to the record amount of stimulus by the Fed. Well, we're set to find out in the months ahead as the Fed is to finally wind down the breathtaking amounts of quantitative easing. We're also moving into an interest rate hiking environment. Market consensus currently expects around 4 US rate hikes this year, while Jamie Dimon of JP Morgan recently suggested it could be as many as 7 rate hikes ahead. There has been a noticeable shift from growth to value names in recent weeks as the high earnings multiples of the high growth names are much more sensitive to changes in interest rate expectations. This corner of the market has been of interest to institutional buyers for the past few quarters as they have desperately been on the hunt for yield. Now, will this rotation accelerate further in Q1 now that yields appear to be on a normalizing path? We'll find out in the next few months, and we suggest in this video 5 stocks that could prove interesting within this wider macroeconomic picture. Our first tip is Meta Platforms. An introduction to Meta Platforms isn't really required, but just for completeness, Meta Platforms Inc. develops products that enable people to connect and share with friends and family through mobile devices, personal computers, virtual reality headsets, and in-home devices worldwide. Before the pandemic, Meta Platforms, then Facebook, was trading under $225, and it posted all-time highs late last year above $375, as it benefited from the stay-at-home trade. It has since eased slightly, and its market cap is now back under the $1 trillion level at $920 billion. Meta Platforms recently changed its name to Meta as it expects the future metaverse to be the next version of the internet. If 2020 to 2021 was the time for the crypto markets, the expectations is that 2022 will be a transformative year for the metaverse. With its global domination of social media platforms, Meta is expertly placed to capitalize on this new paradigm. In terms of analyst forecasts, the stock is of course widely followed by analysts, and of the 52 broker recommendations, 18 have it as a strong buy, and 30 with a buy rating with a consensus price estimate of $401, against the current level around $330. Looking at the stock from a technical basis, the long-term trend is clear on this weekly chart, and the pandemic outbreak in hindsight is a fairly insignificant blip within this powerful trend. The recent rotation out of high-growth stocks has brought FB off its recent all-time highs. This selling pressure could continue towards the 275 area while keeping the strong underlying trends intact, giving the price action some room to breathe in the weeks ahead. However, the long-term positive trends and consensus forecasts up around $400 suggest that the long-term outlook for Meta remains strong. Our second tip is Finch Therapeutics. Finch Therapeutics Group Inc., a clinical-stage microbiome therapeutics company, develops a novel class of orally administered biological drugs in the United States. Currently, its lead candidate is a treatment for Clostridioides difficile infection, an infection that has proven to be very resistant to existing treatments. The gut microbiome is a relatively new area for science and is also believed to play a major role in obesity. The first biotech that is able to find a better solution to the global obesity epidemic will have an enormous global market, if you excuse the pun. The stock had its IPO early in 2021 and, in a bout of early optimism, traded up over $20. It's then drifted lower to a more realistic range, with recent lows under $10. Its market capitalization is now down at under $500 million, which would seem to be more realistic for what is still a new entrant to the market. On positive results of its existing trials alone, there is considerable upside potential. If it was able to capitalize further on its knowledge in this growing new field of medicine, it would quickly become a major acquisition target for Big Pharma, providing significant upside potential. In terms of analyst forecasts, as a relative newcomer, it has less coverage by analysts, but those that do cover it have an average price target of $30. Looking at the stock from a technical basis, it's traded in a broad sideways to negative range from the highs of its IPO. The price currently is down at the lower end of this range, and the RSI has recently recovered from being oversold, indicating that price could recover back towards the 14 to 16 range in the coming weeks. Our third tip is Intel. Intel Corporation designs, manufactures and sells essential technologies for the cloud, smart and connected devices for retail, industrial and consumer uses worldwide. In the summer of 2021, Intel managed to move back to its pre-pandemic highs at $67.50, after posting rapid gains higher from the late 2020 lows under $45. From these highs, however, the stock has drifted lower as other stay-at-home stocks took the limelight and it was affected by the global chip shortages. It remains a major force in the global chip market. It has not benefited in the wider stay-at-home play that has seen many technology stocks race to record highs in recent months. And this is giving an opportunity to the more patient investor, as its market position, pricing power, development pipeline and strong management suggests that the relatively subdued price levels are offering an attractive opportunity. In terms of analyst forecasts, Intel is widely followed, and of the 40 analysts, the consensus estimates is at $55, close to the recent trading, although the higher end of the forecast is up at $80. Looking at the stock from a technical basis, the October 2020 to April 2021 highs may well prove instructive, as a Fibonacci retracement channel calculated from these levels has a 50% retracement at $56, where price action recently ran into some resistance. The long-term monthly trend remains extremely robust, and if or once the $56 area is cleared, the next major upside resistance is seen at the 2021 highs at $68, which seems the next major target due to the very strong long-term trends shown on a weekly or monthly chart. Our fourth tip is Teledoc. Teledoc Health Inc. provides virtual healthcare services on a business-to-business basis in the United States and internationally. Before the pandemic, TDOC was trading around its then all-time high at $88. Then, unsurprisingly, a virtual healthcare solutions provider raced higher on the outbreak, posting record highs above $300 in February 2021. While the promise was there, it was too soon for Teledoc to be able to meet these lofty hopes, and price action has since eased, recently moving back under $80. One thing the pandemic has made clear is that there is a strong future for virtual healthcare solutions globally. So should Teledoc really be trading at levels under what it was trading pre-pandemic? We suggest not, and feel that comparable to how price got carried away higher in 2021, we feel price has now moved too low. So in terms of analyst forecasts, Teledoc is a quite widely followed stock and has a price consensus up at $149 against the recent price action at $80. Looking at the stock from a technical basis, on the chart, the RSI has recovered from being sharply overbought and has even posted a near-term bullish leg, posting an RSI failure swing where a lower low in price is not matched by a lower low in RSI, with RSI in extreme conditions. This can often signify an exhaustion of the move. This is one for the more patient, as it could take time to build, but the company is in an extremely interesting space, with a well-established brand and numerous large-scale contracts, and is trading under its pre-pandemic price, suggesting to us it is an interesting one to hold for the longer term. Our final tip is Mataport. Mataport Inc., a spatial data company, focuses on digitizing and indexing the built world. It offers Mataport Digital Twins, a 3D data platform to design, build, operate, promote, and understand spaces. It plans to be a major provider of 3D information required to build out the metaverse. MTTR had its IPO early in 2021, moving rapidly from $10 up to highs of $28 within a couple of weeks. There was another leg higher in late 2021 to highs of $37.50. This would appear to have been yet another case of too much too soon, as despite the huge promise, those lofty valuations weren't sustainable. Since then, the stock has fallen back towards its IPO price and a market cap around $3 billion. Virtual properties in the metaverse are already changing hands for millions of dollars. Major brands are buying digital apparel makers ready for the influx of users seen in coming months or years, who will all want to be wearing the latest trends. The expectation is that social media, gaming, shopping, streaming services and entertainment will increasingly merge in the metaverse as the technology progresses. If Mataport is able to capitalize on its early position in 3D data technology and be a major builder within the metaverse, then the current market capitalization could quite rapidly look very cheap. In terms of analyst forecasts, despite its recent IPO, there are a few analysts on the company, and the consensus is up at $29.60. So looking at the stock from a technical basis, due to the recent IPO, the technical data is pretty limited, but there is a very clear support level from its IPO level around $10. The RSI is sharply oversold currently, as the late 2021 exuberance fades. But, as on Teledoc, there is a chance that the sell-off here has been overdone as well. The metaverse story has created a lot of hype, and a number of stocks are attempting to ride the hype, whereas Mataport does have a shot at being a real player in the virtual future. So there you have it, our international share tips for the coming year. Thanks for watching. Don't forget we do produce our videos every Monday morning for investors, giving you the key information you need to stay ahead of the game each week. For more information, why not get in touch with us? Clients always come first here at Atlantic Capital Markets. We are award-winning for a reason.